If your credit score is sitting somewhere between 500 and 620, most banks have probably already told you no. They make it feel like homeownership is a closed door for you. But here's the truth they aren't telling you. You can still get approved for a mortgage even with bad credit. But there's a catch. The old auto approval systems are going to reject you instantly. To get the keys to your new home, you have to follow a very specific manual human process that 90% of buyers completely mess up. In this video, I'm breaking down the exact step-by-step roadmap to move from a denied credit score to a clear-to-close approval.
I know how frustrating this is. You're watching home prices settle, you've got a stable job, and you're ready to stop throwing money away on rent. But then you see that FICO score and you feel stuck. The 2026 housing market is navigating a complex transition. Rates have stabilized in that mid-6% range, and while home price growth has finally moderated to about 1%, the gatekeepers, the lenders, have become incredibly picky. If you feel like the system is rigged against you, you're not imagining it. But the reason most people fail isn't just the score. It's because they try to apply the same way a person with a 780 score does. You can't do that. You need a different playbook.
Before we dive into the steps, I need to give you a reality check. Right now, industry data shows
that only about 34% of people who let a lender pull their credit actually end up closing on a mortgage. That means nearly 7 out of 10 people are failing. Why? Because they are borderline applicants who get tossed into a labyrinth of paperwork and human reviews they aren't prepared for. In 2026, if your score is under 620, you aren't being judged by a computer anymore. You're being judged by a human underwriter who's performing an exhaustive review of your entire financial life.
My goal today is to show you how to give that human underwriter every reason to say yes.
Step 1. Choose the right path. Forget conventional loans. In 2026, the absolute baseline for a standard loan is a rigid 620 score. Your best friend is the FHA loan. If your score is 580 or higher, you only need 3.5% down. If you're between 500 and 579, you can still get in, but the FHA mandates a 10% down payment to offset the risk. Step 2. The 90-day credit cleanup. Don't just apply today. Give yourself 90 days. Check for the medical bump. Under 2026 regulations, any medical debt under $500 must be removed from your report. And halt the BNPL. Immediately stop using Buy Now, Pay Later apps. The new FICO 10 models see multiple active microloans as a sign of cash flow distress. Step 3. Understand manual underwriting. Since the computer won't approve you, a human has to do it manually. This is an invasive, line-by-line review of your credit and income. They are going to look for compensating factors, measurable financial strengths that allow them to legally approve a loan that an algorithm rejected. Step 4. Build your gold stars. To win over a human underwriter, you need these compensating factors. Cash reserves. Have 3 to 6 months of mortgage payments sitting in the bank after you pay your closing costs. Rental history. Prove you've had 12 to 24 months of on-time rent payments using canceled checks or bank statements. Low payment shock. If your new mortgage payment is less than $100 more than your current rent, it's a massive positive factor. Step 5. The rapid rescore weapon. If you're hovering just below a threshold, like a 575 when you need a 580, ask your lender for a rapid rescore. Your lender submits proof of paid balances directly to the bureaus to update your score in just 2 to 5 days.
Now listen closely, because this is where people lose their dream homes at the very last second.
Lenders in 2026 use undisclosed debt monitoring software. It silently pings your credit from the moment you apply until the day the loan funds. If you get a pre-approval and then go finance a new car or open a credit card for appliances, the system alerts the underwriter instantly. That new debt will push your ratios past the legal limit and trigger an immediate, irreversible denial. The same goes for your job. Do not change careers or switch from a salary to being self-employed during the process. Manual underwriting requires a stable 24-month history to prove your income is predictable.
I know this sounds like a lot to manage, and honestly, it is. Getting a mortgage with a score in the 500s is like navigating a minefield.
One wrong move with a bank deposit or a credit card, and you're back to renting for another year. But you don't have to do this alone. You don't have to guess if your cash reserves are high enough or if your non-traditional credit history will pass the test.
My team and I specialize in exactly this, the tough approvals. We know the 2026 manual underwriting landscape inside and out.
We know how to package your file so a human underwriter sees a reliable homeowner, not just a low FICO score. If you are ready to stop guessing and start a real plan to get into a home this year, Click the link in the description right now. Fill out the application and let my team review your profile. We'll look at your score, your debt-to-income ratio, and your compensating factors to tell you exactly what you need to do to get a yes. Don't wait until you find a house you love only to get rejected. Get the plan first. Click the link in the description and let's get to work. And remember, the biggest mistake isn't having a 500 score. It's entering the arena without a calculated strategy.
Now, go back and look at step 4. Those gold stars like cash reserves and rental history are the real keys to your new front door. I'll see you in the next video.